Welcome to Retirement in a Nutshell. In this video on how to enter income for a client. Looking at the Nutshell data entry screen, the menu of entry items is on the right side and you work from the top to bottom entering your client information. The top four menu items, which includes income, are what we call required items because they need to have information entered to be able to run a report. Once you enter and save data for any menu item, a check mark will appear to show that information has been entered. Income that is entered using the income menu item includes all income except withdrawals from investment accounts. Income from investment withdrawals is entered later in the process using the investments menu item. Items normally entered using the income menu category include things like salaries, self-employment, Social Security, defined benefit pension payments, immediate annuities, alimony, child support, or other non-investment account sources. Things that are not entered using the income category, but later under investments, would be items like 401ks, IRAs, brokerage accounts, variable or index annuities, mutual funds, or savings accounts. These are items that are assets that have a current account value as well as providing income from withdrawals at some point in the future. Now that you know what is and what is not to be entered here, let's go through the entry process. Select the income menu category and then click on the New Income button and a new income entry screen will appear. To expedite the learning process, I'm going to use an income screen I have already filled in for a client, Ben and Betty Boomer. First, you click on the drop-down for income type and select the source of this income. In this case, it is salary. Next, click on the named owner drop-down and select which client receives this income. This is Ben's salary. For the description, enter the source of the income as the client would describe it. Here, I called it Ben's salary. Enter the gross annual amount of income the client receives from this source before any deductions for taxes or other paycheck items. In Ben's case, $90,000. Throughout Nutshell, always enter whole dollars without any dollar signs, commas, or decimal points, just the numbers. For self-employed individuals, enter the net income they receive annually from their business as salary. It should be the amount they can actually put in their pocket from the business each year. If it varies from year to year, discuss this with the client and use an average. If they get irregular bonuses, this can be entered as a separate income item and averaged so it is not lumped in with regular salary. For COLA, or cost of living adjustments, enter the annual percentage increase in salary they will get on average in future years. Many clients will tell you they will never get a raise, but if you enter an inflation rate for expenses, you should enter an amount for raises. It can be a little less than inflation to be more conservative. I entered 3% for inflation, so I enter a COLA of 2%. If the client has Social Security taken out of their paycheck, then check the box for contributing to Social Security. The program will automatically deduct the Social Security percentage from their pay up to the maximum taxable amount for that tax year. If the client is self-employed, check both boxes and the self-employment tax percentage will automatically be deducted from income up to the maximum taxable amount for that year. When you are done entering or changing information for an income item, always be sure to select the Save button and that information will be saved into the Nutshell database. If the client is a government or private company employee like Ben's wife, Betty, who is a school teacher, that participates in a defined benefit pension plan that will pay a specified pension amount at retirement, and the employer deducts money from Betty's paycheck to contribute to that pension, then I need to enter the percentage taken out of her check and then save her information. I also need to enter as an income item the estimated amount the defined benefit pension will provide annually at retirement. Select retirement pension on the drop-down for the income type. Usually the client's personnel department can provide an estimate for the pension at various retirement ages. Possibly the client can look it up on the internet. I also need to enter the amount of Social Security Ben will receive at the age I entered under the Plan What If menu category. The age I entered there will determine the year that Social Security shows up on the cash flow report, so I don't need to enter any start year here on the income screen. The estimate of the amount the client will receive from Social Security at the age you entered on the Plan What If screen should be entered in today's dollars. Then put a COLA slightly less than the inflation rate you enter for expenses, maybe 2% or so to be conservative. The program will automatically calculate the amount the client will receive at the Social Security age you entered on the Plan What If screen. You don't need to specify the start or end years for any of the income items you enter. The program assumes that salary income starts this year and stops the year before the retirement age you entered on the Plan What If screen for each client. The program also assumes defined benefit pensions start at the retirement age you entered on the Plan What If screen, and Social Security payments start at the Social Security age you entered on that same screen. Nutshell does provide you the flexibility to change start or end years, if necessary, for a particular income item. An example of when you would use the Options tab is if the client knows they are going to quit their job at the end of this year and start a new job next year. On the Options tab, you would enter the current year as the alternate end year for that salary that you entered. You would then enter the new job as a separate income item and use the Options tab to enter next year as the alternate start year for that income. If the client is going to work part-time after normal retirement, you would enter that as another salary item and put in both the start and end year for that part-time work. If you do not put in an end year, the program will assume the salary will end at the age of retirement you entered on the Plan What If screen, and it will not show up on the report. On optional settings, there is also a place to put an alternate end year for Social Security. This is used for clients who have a large difference in ages, so assuming the older person dies first and the surviving client will only get the larger of the two Social Security payments, you can enter an end year for the smaller of the Social Security payments to display how it would go away in that circumstance. Do not use options to try and enter the year Social Security starts. It will not work. The start year for Social Security is controlled and can only be changed by adjusting the Social Security age on the Plan What If screen. That concludes the training for entering income. If you still have questions, check the Frequently Asked Questions tab or call our 800 number and we'll be happy to help you. Thank you for using Nutshell.